I now hand the conference over to Ms. V.D. Shah. Thank you, and over to you, ma'am.
Thanks, Shazan. Good evening to all of you. Today we have with us from Muthoot Finance, Mr. George Alexander Muthoot, MD and CEO, Mr. Oommen Mammen, CFO, Mr. K.R. Bijimon, Chief General Manager, and Executive Directors George M. Jacob, Apin Alexander, and George Alexander Jr. I will now hand over to Mr. George, sir, to take us through the quarterly performance and what lies ahead in future. Over to you, sir.
Thank you. Good evening to all of you. I'm sure the results of this quarter are already with you, but I would just like to give the key highlights. The consolidated loan assets under management increased by 29% to 52,296 for the half year, and consolidated profit after tax increased by 21% year on year to 1,788 for the first half of this year. As far as the standalone loan assets under management are concerned, it has increased by 32% year on year and now stands at 47,016 crores for this half year. Standalone profit after tax increased by 25% year on year and stands at 1,735 crores for this half year. Now to briefly touch upon some of the highlights. The branch network has increased from 4,500 to 4,600. The gold outstanding for this, as I said, gold outstanding has increased from 34,000 to 46,234. Credit losses have come down from 17 crores to 4 crores. The percentage of credit loss to the gross loan assets under management now stands at 0.008%. The average gold loan per branch has increased from 7.7 crores per branch to 10.04 crores. It's a 30% increase in the average gold loan per branch. The number of gold loan accounts from last year has come down from 81 lakhs to 76 lakhs. The total weight of gold in tonnage has also come down from 171 to 163 crores. The average ticket size has gone up from 43,000 to 60,000. The number of employees stands steady at 25,000 for the year. There are some other highlights also here. This quarter has seen the highest ever quarter-on-quarter growth in gold loan outstanding, a growth of rupees 5,739 crores. That's a record growth for the company. The average gold loan outstanding per branch also crossed 10 crores, as I said earlier. 92% quarter-on-quarter growth in branch footfalls. Even after COVID, we are having growth in branch footfalls. 50% quarter-on-quarter growth in the mobile application transactions. The transactions on mobile applications have gone up 50% in this quarter. 112% quarter-on-quarter growth in the online gold loan disbursement. And loan at home services crosses 100 crore disbursement just including this October. The HNI loans above 10 lakhs have also shown a growth of 229%. There is also something more. Our disbursements for the quarter were focused on new customer additions, fresh loans to active and inactive customers, and top-up of loans to the existing customers. This was supported by adequate BCL and ACL activities as well as digital innovations. We dispersed fresh loans to 4.4 lakh new customers amounting to 3,653 crores and to 4.67 lakh inactive customers amounting to 3,460 crores. So these were two fresh disbursements to new customers as well as to inactive customers are ones who have not transacted with us for the past 6 to 12 months. Our average gold loan outstanding, as I said, has been crossed 10 crores per branch. It's a big milestone for us. The company has been able to raise funds through bank loans, NCDs, and commercial paper issuance regularly. We also maintained a liquidity buffer of 7,846 crores as cash, bank, and investments in liquid funds as of September 30th, 2020. The subsidiaries followed a cautious approach towards lending. Non-gold loan portfolio in the subsidiaries constituted about 11% of the consolidated loan portfolio, which came down from almost 13% to 11% now. So the growth is actually happening in the gold loan portfolio. Collections in the gold loan portfolio have significantly improved month on month after the COVID. Every month it is definitely improving. So these are our, we continue to maintain that our loan growth for the year should be in excess of 15% by the end of the year, because even now we are seeing good gold loan offtake. The offtake is good even now. Even in October, we have had good offtake of gold. This month we have increased our gold loan portfolio this month also. I don't want to reveal the numbers, but this month also there is significant disbursement of gold loan and gold loan growth also. We are having sufficient liquidity and new funds are also coming. Our recent NCD issue of 2,000 crores to the retail public issue has been subscribed fully. On the first day itself, we received bids for 3,000 crores, where the total issue was only 2,000 crores. Probably in the next 2 days, the money will be there in our bank also. So liquidity and fundraising has been going on properly. New funds we are receiving from new loans, new credit lines we are receiving from banks also, and our private placement NCDs have also shown good improvement. We also started the market linked debenture issues also, which is again private placement. But all these are showing that we have been able to diversify our funding mix from a year back, where our bank loan constituted about 47% of our total borrowing. Today, it constitutes only 41%. The increase has come from the NCDs, which are only around 30% something. It has now crossed to 47%. So, the Reserve Bank had also asked all the banks with more than 500 crores of the portfolio to diversify their funding mix and not to be over dependent on banks, which we are trying to follow, which we are able to do also. So we see good potential in the next 2 quarters also. And branch expansion, yes, we have added about 50 branches in the last quarter, last half year. Mostly because of lockdowns, etc. We were not able to actually go about and locate premises and maybe start construction also. Now things have started. Probably by the end of the year, we will be adding another 100 to 150 branches this year itself. So the branch additions would generally be in outside Kerala locations. And in Kerala branches, we are also merging a few branches which are not showing good prospects. So Kerala has traditionally been a now non-gold loan portfolio of branches. So we are, for rationalization purpose, we are merging few branches. So that will also increase or reduce our cost in that respect. Otherwise, things are all looking good. Our branches are all open after the COVID also. All branches are open. Employees are able to come. Thank God we are able to work in the branches. Customers are also coming, and our digital business is also showing better prospects, better response from the customers to the digital. So all those things considered, we see good prospects for your company. So with that, I think I will wind up and probably take the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Nirmal Bari from Samiksha Capital. Please go ahead. Nirmal
Yes, sir.
Bari,
Thanks for taking my question. My first question is on the tonnage growth that for the past 2 quarters we have been seeing a decline in tonnage, as in the gold prices have increased and that is true. But how should we look at future growth considering the recent tonnage growth in the tonnage degrowth in the past 2 quarters? Will that act as an impediment to future growth, and what are the trends that you've seen in the same in the month of October?
Thank you. I think, yes, last time also there were doubts about what is this tonnage growth and why it is coming down. It is because new loans, see, the loans are actually very short period, 2 months, 3 months, 4 months. The new loans are getting priced at the new loan to value. The new loan to value is much higher. So instead of pledging 4 bangles, they need to pledge only 3 bangles. So when the new loans coming, it will come only at the current market, current LTV. So when the old loans are taken back or when they're closed, it's actually closed. When they're closed, 90 grams goes out, and for the new similar loan which comes later on, only 70 grams need to come in. That is why we see the tonnage degrowth. But then you asked about how our prospects. See, our loans are based on the loan outstanding. The tonnage doesn't actually give us anything, any profit. Our profit comes only from the lending which we do. On that, we are definitely sure that within the LTV, within the keeping the margin straight, we are able to grow. And for your information, today, as on September, our loan to value is only 61%. 61% is the current loan to value. So we have a lot of cushion with us. It is just that because the price has gone up, customers need not bring 4 bangles. They need to bring only 3 bangles. That is why you are seeing this.
Okay. And does this decrease in tonnage in a way reduce our ability to grow the online gold loan business? Because for the online gold loan to grow, we should have that tonnage with us, as in the jewelry with us already, right? So.
So, I think participants should look at the presentation we have already uploaded on our website as well as Exchange. So we have added 2 slides on the customer base. So we have provided the customer data for the past 1.5 years on a quarterly basis. So we have given some more information into how the churn happens in our customer base. So if you look at, though there has not been a significant increase in the page number 31 and 32. So, the loan portfolio has increased by 14%. Number of loan accounts has increased only by 1%. Number of customers has increased only by 2%. But if you, when we analyze it deeply, what is happening is that, there has been a lot of churn happening in the portfolio. So if you look at, we have given fresh loans to the extent of 8% of the customer base. That means we have given 4,09,000 loans to new customers. We have the outstanding portfolio as of September 30 from this disbursement is about 3,338 crores. And we have given fresh loans to inactive customers. So those who are not at the beginning of the quarter, who didn't have an outstanding loan, we have given fresh loans to those customers. So we have given 3,95,800 such loans. That is also an 8% addition to the customer base, amounting to 2,726 crores. We have also given fresh loans to existing customers with new collateral. The existing customers who have loan account is bringing fresh ornaments and taking a fresh loan. So that is about 6,44,535 customers, which is about 13% of the total number of outstanding customer base. And we have disbursed, outstanding amount is 4,339. So which means that overall the number of customers is not increasing. Within the overall number, there is a lot of change. So new customers are coming, existing customers are taking fresh new loans. Those customers who have not taken in the last 3 months, he is coming and taking a fresh loan. So this is an important thing, for a gold loan, because it's very short term. If somebody takes a loan today, he might even close the loan in, on the next day. So we have also been regularly showing the collection pattern of our gold loans. So if you look at page 29 of the presentation, you can see that 66% of the loans get closed in the first 6, given the breakup for each month. So because there is a lot of churn which happens, even though there is no increase in the total number of outstanding customer base within the portfolio, new customers are coming and existing customers are taking fresh loans. So tonnage is not something which one should be looking at. The churn which happens in the customer base is a more meaningful number. Of course, the addition is only a factor of signifying higher business activity. Ultimately, income is to be given by a higher disbursement and higher loan outstanding.
I think the tonnage will increase. This is MD here. I think the tonnage will increase when gradually the gold price comes down. When the gold price comes down, people have to bring more gold. Now they are keeping, instead of 4 bangles, they are bringing only 3 bangles. So the bangle which is kept at home, next time when the gold price comes down, they'll bring that also. I think we should be seen as that. Thank you.
Okay. So my second question is on liquidity. So we are carrying excess liquidity, as you said, of 7,800 odd crores. So what was the cost of this excess liquidity, negative impact of excess liquidity? And secondly, if you can give the incremental cost of funding at which we are borrowing from various sources.
So it is not excess liquidity, it is higher liquidity. It's not excess.
I think last con call also this question was raised, and we had said that, given the way we are growing, we need to be prepared for adequate fundraising to meet the growth. So we were trying to explain this. Since in the last quarter we have grown almost by 5,700. That was possible because we had a higher level of liquidity carrying in the balance sheet. So, in the current times, we need to maintain a higher liquidity to meet any uncertainties. Second, to meet the growth requirement also, we need to be having an on-balance sheet liquidity available. So, we are maintaining a higher liquidity. In terms of the cost of funding, I think the Q2 average cost of borrowing was somewhere around 9%. I think in the third quarter we should see that coming down because the incremental, because in the second quarter a lot of churning has happened in terms of the cost. You would have seen what rates we have borrowed in on the public issue of NCDs. So I think from Q3 onwards we should see first decline in cost of borrowings.
Thank you. This is the operator, Mr. Bari. May we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Piran Engineer from Motilal Oswal Financial Services. Please go ahead.
Yeah. Hi, sir. Congrats on the great set of numbers. I have 2 questions. So my first question, I'm again referring to slide 32. I want to understand this correctly. So in this quarter, we have disbursed fresh loans to 3,95,000 plus 4,09,000 plus 6,44,000 customers. Am I right? So that adds up to almost 14-15 lakh customers.
So this is only a part of the entire disbursements for the quarter. We just wanted to highlight, how the new customer additions have been, how our we were able to bring our inactive customers, and also the fact that the existing customers have brought fresh jewelry to take a fresh loan. Now, the existing customers also would have made top up on existing loan, so that number we have not disclosed. So, we just wanted to highlight the fact that the customers are fresh customers are coming and taking a loan. And if you look at the fresh new customers, that has been consistent percentage across the last 6 quarters.
Okay. No, so my question really is that when I add this up, and I get your point that there'll be top-up loans to existing customers, but we have disbursed, fresh loans excluding top-ups of about 14-15 lakhs, and which is the same YOY. Now, I would have expected that, because of the pandemic, cash flow disruption for your customers, the number of loans disbursed, to fresh customers and existing would have gone up dramatically. But it's actually kind of flat YOY. So how do I really read this data?
So you need to see it across the quarters. In fact, the outstanding loan amount, if you see, it is comparatively higher than the previous quarters.
Yeah, but that's because of gold pricing going up. So.
No, that is not a factor of gold pricing. No, that is, you look at the numbers. The numbers have increased across the quarters.
Okay. So then that leads me to my second question. Now gold prices have been stable for the last 3-4 months. I think that gold prices remain flat in the foreseeable future. From this 47,000 crore loan book number, do you expect growth over the next 2 quarters? I understand from the FY20 base of 41,000 crores, there will be growth. But from the 47,000 crore number, assuming flat gold prices, how should we think of growth over the next 12 months, 18 months?
So we had given a guidance of 15%. I think we are almost reaching there. Definitely, we don't want to give any number now. We don't want to do any change. But certainly, it will be more than the total year on year will be certainly be much higher than the 15%.
Yeah, sir, but that's of the 41,000 crore base. But, in the first half, gold prices have moved up. We've got that tailwind. Now, in the last 3 months, gold prices have been flat. So, from this level, how should we, from the 47,000 crore level, I understand it's a bit too much of a numbers question, but if you can just help guide us as to how that will be really helpful.
No, we don't want to give any different guidance. The guidance we gave was 15%. Definitely, we'll do more. We don't want to give any higher guidance now. Certainly, it will be much more.
Oh, okay, fair enough. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Bunty Chawla from IDBI. Please go ahead.
Thank you, sir. Thank you for giving me this opportunity. As you have, sir, rightly said, the LTV as of September is 61%. Can you share the incremental LTV which we have disbursed during this quarter? If you can share that number. Hello.
So, we are giving currently maximum LTV of 75% on the gold price. So, average should be somewhere around 70, 71.
71. Everybody doesn't take 75%. So, incrementally, it will be 75%. 70%.
Okay. Okay. And sir, secondly, as we are seeing very good amount of decline in stage 3 assets from 2.56 to 1.26%. So can you throw some light? What has been the trigger for this? Have the client has completely given amount back, or we have collected the interest part and refinanced at a new LTV? How could we see this part, sir?
The second part, what you said is the correct one. They would have paid the interest and taken at the new LTV. Please also remember one thing always. If I don't give it at the new LTV, he will go and take it from competitor. So I will do it ourselves. So that's the reason.
Oh, That's great. Lastly, sir, any auctions we have done? If you can share that number, sir.
Very negligible.
I think it is 5 crore or 10 crore.
Okay. That is very helpful. And best of luck, sir. Thank you very much.
Thank you. The next question is from the line of Utsav Gogirwar from Investec. Please go ahead.
Thanks for the opportunity. Sir, a couple of questions from my side. You at the initial comments you mentioned about the branch expansion and you plan to add around 100 to 150 branches in the second half. Just want to ask, sir, is there any roadblock to add more than 150 or 200? Like, can we add 500 branches next year and expand rapidly? Just want to understand on the branch expansion strategy. Is there any hindrance or roadblocks? That is first. Secondly, sir, just want to understand growth plans for the MFI and housing business. And lastly, penal interest amount for this quarter.
For branch expansion, it is just our own number that we need to keep it to manageable levels, because we don't want to increase 500,000 branches, because we would rather increase the per branch business. That's what we were talking about. The per branch business actually is optimization of cost, optimization of everything, operation cost, etc. So per branch business is more important to us. But then there are places where we need to be present, and that is why we always have about 100 to 150 branches opening, and probably about 40-50 branches we will also merge or do optimization. So net about 100 to 150 branches is what we have been doing every year. I think that's a reasonable number. And along with that, we would also like to increase the per branch business. That is your first question. The second was about
growth plans and the MFI and housing business.
MFI housing business. I think MFI housing business actually this housing finance. We are not doing any substantial disbursal now. It's flat. It's only collections which are coming. And microfinance, they have started lending about 100 crores every lending in the past 2 months. So that is the incremental lending. So probably our home finance will see a flat growth or probably a little bit of degrowth by the end of the year. And microfinance, they want to grow by about 500 crores. So that's earlier they had been growing much more, but this time they will be growing by about 500 crores.
Okay. And sir, penal interest amount for the quarter, and just if I may ask one more question, the rain cost for the quarter is relatively higher compared to last few quarters, and I believe that we would have revised our branch agreements, rental agreements, and I was expecting that we'll have a lower rent expenses. But what am I missing over here, sir? Why the rent expenses are higher?
In April, etc. We did not pay some rent. We withheld some rent. So afterwards, when the branches started opening, the landlords also asked, your branches are working perfectly. Why do you want a reduction in rent? So we had to actually give back, or maybe better relationship with the branch. We had to give back, or maybe bring back what we had withheld. So because they are also looking at your branch is working well, your profits are high. Why do you want to reduce my rent? And the rents are not very high for Muthoot. That is one of the reasons for the rent.
Okay, sure. So lastly, just the penal interest amount.
The penal interest amount is not material, and especially after the moratorium, we have given a lot of waivers in terms of the penal interest, etc. So that number is not material.
See, penal interest comes in only after 12 months, and very few loans cross the 12 months.
Sure, sir. Perfect. Thank you so much, sir. Yeah.
Thank you. The next question is from the line of Saurabh Dhole from Trivantage Capital. Please go ahead.
Yeah. Thank you and good evening. I have two questions.
Little more louder, please. Louder.
Hello. Can you hear me now?
Yes.
Yeah. So I have two questions. The first one is, have you seen any difference in the end use of the loans that you gave against gold? Because you've mentioned in several of your commentaries that this is largely for the purpose of, say, marriages or any healthcare emergency. So has there been a change in the end use of the gold loans that you give today?
No, sir. I don't know when we said it is for marriage or health purpose. We have never ever said that. our loans are usually for small business purpose, small working capital, etc. It's never for marriage. I don't know how you got that impression. I have never said anywhere that.
Mostly the loans are going for agricultural activities, small businesses, trade,
shopkeepers.
Mostly the end user working capital requirements. So he is expecting some cash inflow to happen 2 months later, 3 months later. So he wants to bridge the gap. So that's why people come and take a loan. Maybe 5%, 10% might be taking for purely for domestic emergencies, but majority is for working capital purposes.
But in the last 6 months, you've not seen any material difference in the end use which you've experienced in the past? As in, it's again in that 90% of the loans are again for working capital or for their business purposes. The trend continues to remain the same?
Yeah, I think the information we get is from the branches. We don't really go deep into what he is actually going. But then generally our branch managers talking to the customers know, and they give us the response that these are going for this. It is not that if he says it is agriculture, there is a price difference or an LTV difference or interest difference. Nothing. So whatever loan he takes, the interest rate is the same, whatever purpose. But then our managers have their ears to the ground and probably they talk to the customers. They generally say that this is going for this.
Mm-hmm. And sir, in several of the other financiers management commentary, it's been a common trend that almost everyone is growing their gold loan book today. So I'm trying to understand if on the ground also your employees or your branches are reporting back to you, telling you that there is increased competition. Is that a trend that is observable today?
Yeah, we see that there is always competition. There have always been competition. Today, probably it is little more intense. Banks are also doing it. They are advertising more. They are saying they'll give that, they'll give this, interest rate is that. We have always seen that there is always competition. But competition also increases the overall market business, overall pie. Overall business is increasing. So, newer and newer people are coming forward to pledge the gold. That is what we see in the competition. So you are seeing, even in spite of the competition, we are able to grow. Some of the banks are also able to grow. So everybody is growing because more people are thinking of gold loan. So they all want to see everybody coming forward. Those who are earlier not pledging loans are also pledging because banks, etc., the new generation banks, old generation banks are also giving loans. More people are using this opportunity to raise funds. So we see competition. Our staff also says competition, but then still we are able to, that is one of our strengths, we are able to, our goodwill and our customer service and our fast service, etc., we are able to retain and get new customers also. Competition always.
Yeah. But competition is not distinctly higher in the last 6 months vis-a-vis the earlier part of the years?
Yes. After COVID, the competition is definitely higher. But I said, we are also getting more business, they are also getting more business. Competition, I am talking only from the bank perspective, not from NBFCs. NBFCs competition is not material for us at all.
Okay. Thank you.
Thank you. The next question is from the line of Alpesh Mehta from Motilal Oswal. Please go ahead.
Hello.
Yes, please go ahead.
Yeah. Hi, good evening, sir. And congrats for the set of numbers. The first question is regarding if I see current quarter-on-quarter growth is partly the function of LTV.
Your voice is breaking.
Is this better now?
Yeah.
Yeah. Okay. So, sir, if you see the quarter-on-quarter growth in this quarter, it's largely the function of LTV. Last quarter, we were at around 65% and now we have increased to 61%. So, that explains almost 10% of quarter-on-quarter growth and roughly 3-4% is because of the increase in the gold price. So, the first question is related to till what level of LTV would you be comfortable? Regulatory limit is 75%, but what would be your comfort level? That's the first. And secondly, we are not seeing a sharp drop into the cost of funds into this quarter, whereas some of the other financials have reported. Any specific reason for the same and how do we see that?
See, the LTV, average LTV, if I don't know, 58% or something was we had last quarter. Today you are saying about 60%. So the new loans are the price with the new rate. That is the reason for that. All of a sudden, if the price goes up, the average LTV of the existing portfolio will drastically come down. As the price stabilizes, it will gradually start going up. So we will be comfortable up to 75% is what is the regulatory. We definitely will be comfortable lending up to 75%. So there is more elbow room for growth or more elbow room for giving more loans. The second question about
just one thing. Sir, just one thing. If I look at the slide number 30, I just see last quarter LTV was 5%, now 58%.
Yeah, I think I can give one perspective on that. See, in normal times, when the gold price is stable, the average LTV tends to be around 70-71%. So the maximum cap is 75%. So when the gold price suddenly goes up, the average LTV tends to be lower. But the new loans we are giving at the regulatory maximum LTV cap. So as we move along, the average tends to move higher. That is a function of the market. Now, we have to move. If the gold price remains at these levels, gradually the average LTV will move closer to 70%. So it may not happen in 3 months' time. It may not happen in next maybe 6 or 9 months' time if the gold price remains stable.
About LTV, we do not include the accrued interest in this.
Yeah, this is shown at principal value. Yeah. Interest accrued is only a small amount. If you include the interest accrued, it will be another 2%. Instead of 61%, it will be 63%.
Okay. And for slide number 20, there has been more collections during the quarter. Typical, I can understand higher disbursement in the LTV or the higher demand. Right? Collections have also showed up quite significantly in the quarter from an monthly average rate of around 70 billion rupees.
Yeah. So, as we said, we have actively encouraged. So we have actively encouraged top-up. So in our system, when a person has to do a top-up, he has to settle the interest. So, especially when there is a rise in the gold price, person can do a top-up. So, he will close the earlier account and book a fresh loan. So that activity has been at a peak level. So this is the reason why we have shown we see a higher level of disbursements. So a customer can take a loan in the month of July 1st. In August 1st, he can again close the earlier loan and book it as a fresh LTV. So these will come as a closure and as well as a fresh disbursement.
Sure, got it. And sir, lastly about that cost of fund question, the drop has been hardly 5 basis points. I think it should have been on a higher side considering your increase to significantly lower rate.
Mr. Mehta, sorry to interrupt you, sir.
We didn't hear properly. I feel you were asking on the cost of borrowing. So cost of borrowing has been around 9%. There has been a lot of churning happening in the borrowings in the second quarter. Right now, the incremental cost has come down. So we should see that cost of borrowing coming down from the third quarter onwards. You would have seen that we have raised the 2,000 crores in the public issue at maybe at an average rate of about 7.6%. So I think going forward we should see that average cost of borrowing coming down.
Sure, sir. Thanks and all the best.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
George Alexander ji, it is a very indeed fantastic result. My point is there, in quarter 2, interest cost rises by 34% and interest income rises 19% only. What is the reason for this?
So there is always a lag effect because 3 months is a very short period for us to generate a large income. I think the entire 5,000 crores would not have come in the month of July. It was spread over 3 months. So to that extent, the income. So that effect will come more in the third quarter.
Third quarter. Okay. And sir, do you want to revise the guidance from 15% to upward side?
So we don't want to give any specific number right now. We gave initial guidance of 15%. Since we have already achieved 14%, certainly we will be closing the initial guidance. Last year we had achieved 22%. Right now we are not giving any specific number. We are hopeful we will be able to do better in the next 6 months.
Okay. Thank you, sir. All the best.
Thank you. The next question is from the line of Dhaval Gada from DSP Investment Managers. Please go ahead.
Yeah. Hi, sir. Just one question. This is related to the data that you've provided on slide 31 and 32. So I just wanted to check the number of customers that you have. Does it include the inactive customers as well? And what is your definition of inactive customers, if you could do that?
So inactive customers is those customers who don't have a loan at the beginning of the quarter. That is the definition we have used for this analysis purpose. He has, a customer who has taken a loan prior to July 1st and closed the loan, and he doesn't have a loan account on July 1st. He comes and takes a fresh loan. So that is a inactive customer. A new customer is entirely a new KYC and a fresh loan.
Okay. And does the 48 lakh customer base include inactive customers?
No. 48 lakh doesn't include any inactive customers. That is the 48 lakh customers is those customers are having a loan account as on September 30th.
And sir, if you were to think about total customer base, active plus inactive, what would be the base?
Mr. Gada, the line for the management is disconnected. Please hold the line.
Okay.
Ladies and gentlemen, the line for the management is disconnected. Please hold while we reconnect them. Thank you. Ladies and gentlemen, thank you for patiently waiting. The line for the management is reconnected. Thank you, and over to you, sir.
So, the question, interesting.
Yeah. So the 48 lakh customers is the active customers as on September 30th. Those customers who are having a loan account as on September 30th.
Right. And so my follow-up was, sir, what is the total number of customers, active plus inactive? So your base of customers.
Inactive will be a very, very huge number. So some people would have not been there for the last 3 months, 6 months, 1 year, 1.5 years. They are also inactive like that. But they may come later.
Yeah, so the idea was to just understand how many customers you've already touched in right now and in the past. So the database that you have, that is what I was trying to get.
That number probably.
I'm going to say a few crores.
We will give that number at a later stage.
Okay, fine, sir. Yeah, thanks. All the best. Thank you.
Thank you. The next question. The next question is from the line of Kunal Shah from ICICI Securities. Please go ahead.
Yeah. So, two questions. Firstly, when we look at in terms of the number of customers, so that's been still steady if I have to look at it over last 18 odd months. Okay, it has not moved. It's somewhere around 48 lakhs only. So how should we read it? Maybe once we start this branch expansion, would we ideally see the increase in the number of customers, and that would be driving the overall growth as well? And second is, when we look at maybe in terms of the number of customers, it's steady, but expense base is building up. No doubt we can say that AUM is also growing. But finally, I think cost is also rising at a much faster pace to cater to a similar, maybe the similar base of the customers. So now where do we finally see in terms of cost? Because the larger part of growth is driven by the rise in the gold price.
So we have told you that we see growth in this year also, definitely more than the 15%. We are sure that there will be good growth this year also. So the gold price is there. Sometimes it goes up, sometimes it comes down, but then still it is stable. We will be able to grow our business. That we have been able to demonstrate all through. So because price has gone up or come down, doesn't actually affect us much. Okay. Second is the customers. Some of the customers are now taking bigger loans also. That is why the number of customers. We don't want all to be small customers. If the customers are big also, is good for us, definitely. Because our interest is only on the outstanding. So small customer will get only small interest. Big customer will get big interest. So actually, it doesn't matter much.
Okay. But in terms of the expenses, if we have to look at it, maybe apart from rental also across the board, there has been the increase. Some would be normal increase, maybe in terms of employee also, quarter on quarter there is a rise, year on year also. And still we keep on adding the branches. So I think definitely on the employee side also we would be looking to add. So where do we see the cost finally settling down?
See, I think generally our cost of operations are definitely under control. We have a tight-fisted cost of operations. But of course, we give lot of incentives to our customers, to our staff also. That is one cost. And rents, etc. Every year, rent goes up over 5-6% always. So rent also goes up. That is just inflation. The inflation takes about 5-6% every year. Whether it is staff cost or other expenses, etc. Inflation takes about 5-6% always there. It has to be.
In the second quarter, the OPEX is around 4%. I think 4 to 4.5% is something which we should always factor in terms of the OPEX. We don't expect much gains to come on the OPEX. Again, on the customer base, I think you should go through the slide 32. We cannot. There is a lot of churning which happens, and there is a lot of new customers comes in. Probably all these quarters, it's not the same set of customers who have been coming in. So in the last 18 months, we have been able to add almost like 25 lakh customers or 30 lakh customers, so new customers, which itself is a big churn which is happening.
Okay, so maybe some of the existing customers become inactive and you keep on adding on to the new customers.
Exactly, that is exactly the correct thing.
Sir, somebody takes a loan today, he closes it after 10 days. Afterwards, he needs only after 3 months. He comes at that time only. Only when he needs the next loan, he comes. Otherwise, he keeps the gold in his house.
Yeah, that's the reason you are saying inactive base is also very high.
Yes.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Lokesh Malia from SBI Mutual Fund. Please go ahead.
Hi, just accounting questions. We have a derivative financial instrument which appears on the asset side. On March, it is around 344 crores. I think in this particular quarter, it has become a very small amount, and there is a derivative liability of 174 crores. So if you could just explain how that is done, that is one. And secondly, in the P&L we have under the other comprehensive income, 14 crores on revaluation of equity. If these two bookkeeping questions would answer.
Okay. So Lokesh, we are following a hedge accounting. So all these mark to market, at every quarter when we report, we need to do a mark to market. So all these mark to market, we are keeping it outside the P&L. So that's why it's coming as an asset or a liability. And the comprehensive income is mainly our share valuations, which we do on our investments. We have investments in ISA, CRIF, and the forex and on the other investments. So that also we are not taking it straight to P&L, so we bring that to other comprehensive income, so that it doesn't impact this quarterly valuation doesn't impact the profit.
Sorry. So so just to understand this,
I mean, does the movement in the exchange rate has been pretty stable over this period, right? So the 344 crores moved to a liability. What is it driven by? Is what I was trying to understand.
If you look at the what is it, ECB borrowing, the principal amount is always valued at the exchange rate. So the impact because of that, because it's 100% hedged, the impact of that the valuation done on the reporting day is not brought to the P&L. It is actually brought in a derivative asset or liability. So I think last quarter it was 75. This quarter I think it is around 73 or 74. So these movements play a role in that. Because it's hedged, we need not bring it to the P&L. The expenses are booked in the P&L based on the hedging costs.
Okay, I'll try to understand it better after.
Yeah, so I think it's a complex thing. We can share you.
Anyway, it doesn't affect our income or profit, etc., because it is fully hedged. Only the hedging cost is our expense. All the other things, that's what I also understand. All the other things are below the line just for accounting purpose. It doesn't. Other than those things, don't go out of our funds. That's all. It's not an expense for us.
Sure. Thanks.
Thank you. The next question is from the line of Prashant Sridhar from SBI Mutual Fund. Please go ahead.
Yeah, so just any numbers on collection efficiency in the non-gold portfolio?
Yeah. The collection efficiency in the Muthoot home fin is 84%, and the personal loan book it is 93%. In Muthoot Money, that is the vehicle finance, it is 82%. And in Belstar,
and what about MFI, sir?
That's Belstar. Sorry, it is 86%. 86.
Okay, thank you.
Thank you. The next question is from the line of Abhiram Iyer from Deutsche CIB Center. Please go ahead.
Yeah, sorry. I actually wanted to ask the same question on efficiency, but just to clarify, these are September numbers, right? The percentage that you just mentioned.
These are September numbers, yes.
Got it. And the other question that I wanted to ask was on uses of liquidity. So could you just give us an idea of the sources of fund, so basically maturities of principal and interest that are due for the company over the next 6 to 9 months?
See, for us, if you look at our repayments, the major ones will be the bank borrowings. Most of these bank limits are working capital limit. So working capital limit, as probably you might know that it's a regular limit. So we take it for a period of 3 months, 6 months, 9 months, like that. So when it comes for maturity, you need to make a repayment, but on a subsequent day, we can again avail it. So this is a normal rollover. But for our ALM purposes, we show this as a maturity, as a repayment. So every month we'll have about 1,500 to 1,700 crores of these bank borrowings which matures. Then the major item is the commercial paper. We have borrowed about 5,000 crores. We normally borrow it for a period of 3 months. So every month, we'll have a maturity of around 1,500 crores CPs. CPs are, we are able to place the CPs again in the market. So we don't face any challenge. However, we are keeping a large liquidity to meet any kind of any eventuality. We are also raising fresh funds to meet the lending requirements.
Got it. Thank you very much.
Thank you. The next question is from the line of Vikas Agarwal from Bank of America. Please go ahead.
Hi, thank you. Congratulations on a good set of numbers. A couple of questions from my side. One is, can you give us a number of what is the gross financing raised in the last quarter, total funding raised? And second question is, again, going on the microfinance business, you mentioned that the disbursement has been around 100 crores in the last couple of months, and the full year target is about 500 crores. But if I just look at, say, March 21, March 20 number compared to current, it looks flat. So effectively, 500 crores is something which needs to be done in the last 2 quarters, current quarter and next quarter. Is that number still valid, 500 crore growth target? And what pockets are you seeing the demand, or what is your focus area in focus pockets for MFI business?
So the 500 crores incremental growth can happen in the next 5 months. In the first month itself, we have grown by about 80 or 100 crores. So it is not at all difficult. It can happen because we have done much more than that earlier. So when we start in the next 6 months growing 500 crores on a 2,600 crore portfolio, I don't think it is difficult. The main branches, most of the branches are in Tamil Nadu, is what Belstar. And last 2 months, collections are also happening, disbursements are happening. So we don't see a challenge there. About funding,
so in Q2 we have totally raised fresh funding of around 4,133 crores. This is bank borrowings as well as NCDs, and not included the rollovers as well as the CP issuances.
Got it. Thank you, sir.
Thank you. The next question is from the line of Abhishek Murarka from IIFL. Please go ahead.
Yeah, good evening. Thank you for allowing the question. And congratulations for the quarter, actually. Great numbers. My first question is, do you maintain any data on customer attrition? So when a customer doesn't come back and renew the loan, or when they close the loan, whether they are doing so to migrate to some other lender or some other bank, or whether they don't require the funds. Do you maintain any such data, and if you can share some insights as to what the recent trends have been?
So we pass them as inactive customers, Abhishek.
Okay, that's it. So, okay. And this per branch business, is there any limiting factor to it? Maybe number of customers or the catchment area or something like that. Is there any limiting factor? And if yes, what could be the limit of, let's say, a per branch business number?
See, there are branches with 5 crore, 10 crore, 15 crore, 20 crore, 30. So we have branches 25 crores also. So a branch can handle that. So it is just that it's an average. 10 is just an average.
Sure. So the highest would be about 25-30 crores, is it?
Yeah.
All right. And just a final question. In your online business, is there any difference in the yield between, taking a gold online versus offline?
Actually, we incentivize them by waiving some fees and charges. That's all.
And that would be the processing fee or something?
Very small amount.
Okay. All right, sir. Thanks so much, and all the best for the next quarter.
Thank you.
Thank you.
Thank you. The next question is from the line of Harshvardhan Agrawal from Infina Finance. Please go ahead.
Hi, sir. Thanks for giving the opportunity. So what we see in the broader economy is that more and more lenders are getting conservative in terms of lending, especially the ticket size that where we operate. And I'm not talking about gold loans, but other avenues of funding. So is it that we are seeing an increased demand for gold loans per se, or is it like or is that's not the case?
You are right. Some of the other loans are not easily forthcoming for people who require funding. So because of that, we see better demand or offtake for gold loan. I think it should continue, and that is what we saw in the last quarter. We had a growth of more than 5,000 crores. That's a record growth in that quarter. So more and more people who are not unable to get loans from elsewhere are looking at gold loans, whether it is Muthoot or bank or XYZ. Gold loans are the flavor which people can get today. So we see this demand continuing for much more time. Even afterwards, when the economy picks up also, gold loan demand will grow. Definitely when even the economy is not picked up much, it is for all the other pent-up demand and pent-up payments that they are taking these loans. So once economy picks up, definitely that time also gold loan will go. So overall, we see good prospects for gold loan.
So sir, just to follow that, so do we expect that this fresh the fresh customer additions that we've done of 4.1 lakh customers in this quarter, do we have a target of some certain number of customers that we would acquire for, say, in the next 12 to 6 months or 12 months?
So we do a lot of marketing and sales promotions, etc., to get new customers also on our books. So that is done at the branch level. So every branch definitely would like to get newer and newer customers also, because new customers is definitely new business. So that is always there. The drive to get new customers is always there at the branch level.
But we don't have a target set as such.
No, we give targets to the branch managers and say you have to do that, you have to do this. But then not that easy though. We can say every branch bring 10 new customers, etc. But definitely we incentivize branches also if they bring new customers.
And so one last question is regarding the interest rates, because what we hear is the new lenders which are coming into the gold finance business are at a lower lending rate. So are we looking to reduce the lending rates, or we are offering lower rates to our customers?
See, our policy is that we try to keep our interest margins intact. So if our cost of funds comes down, we reduce our lending rate also, but we try to keep our interest margin intact.
Okay, so
the interest spread. We try to keep the interest spread intact. So if our cost is definitely coming down, we will definitely offer that to the customers so that we are not affected. Our interest spread is safe.
Okay. So what you're trying to say that we won't reduce our interest rates just because the competition is doing so, but it will be only a factor of our cost of funds.
So finally, if you are getting business at the rates which we are comfortable with, why should we reduce the rates?
Okay, sir. Fair point. Thanks a lot, sir. That's all from my side.
Thank you. The next question is from the line of Sakshi Goenka from Alchemy Capital. Please go ahead. Sakshi Goenka, your line is in mode.
Hello. Hi, sir. I just have two questions. When do you feel that you will be comfortable unwinding the surplus liquidity which you have on your balance sheet? That's the first question. And the second question is, George sir had mentioned that you are now getting customers who want a larger ticket size loan. So I was just wondering, why would a customer who would want a bigger loan come to us, given our interest rates are much higher than what a bank would offer to them? So just wanted, because generally we cater to those customers who want small amounts for a short period of time. So why would a big customer be attracted to us?
So in terms of liquidity, it's an ongoing process, because we are growing every quarter. We need to be prepared for meeting those growth targets. So, maintaining this level of liquidity is important for us, both from a liquidity perspective as well as for meeting the growth requirements. So, this level of liquidity we are expecting to be maintained at least, going forward.
About this HNI customers, the higher ticket customers also definitely come to Muthoot. It is not just because it is interest rate driven. It is the comfort is there, the speed is there, the convenience is there. It is not that every other person who is offering a lower rate probably take a bank. All the branches of that bank may not be offering the gold loan portfolio. So most of it is convenience, repeat business. So they are convenient, they'll come. It's not that everybody will go only to the lowest interest. In that case, probably only State Bank of India would have had any business for any loan in this country. So every bank gets business, whether it is State Bank or a bank with a higher rate also, everybody gets business. I don't think we should think that it is just interest rate driven. It's not that.
Sure, sir. Thank you so much.
Thank you. The next question is from the line of Kaushik Agarwal from Haitong Securities. Please go ahead.
Hello. Yeah, hi sir. Thank you for the opportunity. So there are a couple of questions from my side. So first question is regarding the security cost. So what is the number for us, as we can see that one of our competitors, they report this number in their investor presentation. So this number for FY20, or if you can give us what will be the proportion of this number of the overall operating expense. And the second question is regarding the gold price fluctuation reserve, which we have created in the year FY17 for 230 odd crores. So how likely are we going to see such reserves being created by the company in the future? Third question is regarding, sir, in the opening remarks you mentioned that there has been lot of improvement or YOY growth in the online transaction, but still we see in your investor deck that the number of customers or in percentage terms risen by 50 bps. So is it on account of reluctance of customers on use of technology, or if you can throw some light on this? Sir, yeah, these are the three questions.
The security cost is actually the employees who are doing the security job comes in the HR, in the employee cost. All the other things come in the IT cost or other costs. So it is part of this. We have never tried to find out what is the security cost, etc. Everything it is merged with all those things. So we have never done that. The second question was about
on the gold price fluctuations. Actually, we merged all the provisions created when we transitioned to Ind AS. So we don't have any balance sheet item called gold price fluctuation. However, there is a excess provision which we are maintaining of 295 crores over and above the ECL. That we have kept, and probably we will review it at the end of the year when we do a relook on the PD and LGD percentage.
So if you ask me honestly, for a gold loan company, there's no need of any provisions, whether it's a standard asset provision or NPA provision, nothing is there. But nevertheless, all these provisions put together, we have more than 1,000 crores of provisions with us. More than 1,000 crores. So that actually is fully our own fund only. It's own fund. So provisions, the 230 crores or something lying there, we just kept it there, that's all. Because honestly, I said there's no need of any provision for anything. So what we have 1,000 crores actually net worth. You can technically add it to net worth. And the final thing was about
improvement.
Improvement is
your online transaction.
Just the customers who are not digitally active, we are actually mapping them and talking to them and hand-holding them to start digital transactions. They are see 30,000, 20,000, 15,000 loan customers, not that computer friendly, etc. So we are trying to make them to do some transactions digitally so that after a while they can do this. So now traveling also is not that convenient. So anybody who can do digital, we are encouraging them. So as you also rightly said, it is because our customers are small customers, low-end customers who are not that computer user friendly. We are trying to still bring them there. They are not doing all their transactions online. They are doing some of their transactions online, some interest payment, some top up, some repayment. But for taking back the gold and bringing the gold, they will come to the branch.
Okay. And so just one data keeping question. What will be the portion of online gold loan of our total AUM? Yeah, sir, that's it. That's the last question.
It's very negligible. Traditionally, people are more comfortable coming to the branch and taking a loan, but we are taking effort in terms of doing online.
So if worst come worst and somebody is not able to travel, just doing it as a reserve. If somebody is not able to come and then some real problem that people cannot come out, they can use this opportunity. But if they are able to come, they would rather come to the branch, give the gold to the manager, hand it over, take the receipt and go. That is more convenient for them. Comfortable, actually. They are comfortable.
Okay. Thank you so much, sir.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as a last question. I would now like to hand the conference over to the management for closing comments.
Thank you, investors. Thank you for really supporting us all this while. we from our side, we will see that we run the company well and certainly protect the interest of all the stakeholders, whether it is the equity stakeholders, whether it is our lenders, whether it is our borrowers, whether it is our NCD customers or banks. On regulator, we will put all efforts to see that our company or your company does a good job. So that is from our side. And thank you for your support. Please continue to support us, and that is our strength. Thank you. Goodbye.
Thank you. Ladies and gentlemen, on behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.